Here is the easiest intraday trading strategy there is, and in spite of being so simple and easy, the results are quite impressive, which you will see when I show you the backtesting. And just so you know, I've personally used this strategy for 6 months in the past and I had good consistent results. Alright, let me show you the strategy. You will need to select simple moving average indicator and the length of the indicator needs to be set at 14. We will be trading in 15 minutes time frame, and what you need to do is whenever the candle crosses the moving average line and closes with a strong candle, you take the trade. If it closes above the line, you buy and take a trade, and when it closes below the line, you take a short trade. For all the traders, it's best to keep a fixed target as the exit, and then after it reaches the target, we can trail the profits. And stop loss should always be set at 1/3 of your profit. So for Nifty, I always used to use 60 points as my target, and from there I keep trailing my profits, and exactly 20 points as my stop loss. And now to show you how brilliantly this strategy works, let's get to backtesting. We will be backtesting for the past 10 continuous days. So it's 10 continuous days and not just the days when the strategy works. Alright, so 10th day, 9, 8, 7, 6, 5, 4, 3, 2, and this will be our first day. We will start here. Here we have a strong close when it crosses the moving average line. We'll short here, and as you can see, it hits our target. But your profits can be much more depending on how efficiently you are able to trail your stop loss, which will be a topic for another video. Now let's head to day 2. Here we have a buy opportunity after it crosses the line. We book a loss and then it heads downwards direction with a strong close. So we will take a trade and again a loss. Just so you know, 3 of these loss is equal to 1 of our profit. So happily accept the losses and move on. Moving to day 3. You can see here it closes below the moving average line. We take the trade and we book a profit. Again on the same day, you can see here we have one more opportunity for a trade. We won't be taking it as it's very near market closing time. I have a rule to never take any intraday trade within 1 hour of closing. Alright, moving to day 4. Here you can see the candle closes on the line. We need the candle to close strong below the line, not on the line. Here we find that opportunity, we take the trade and book our profit. Again later on in the same day, the candle closes above the line. We take our trade and book our second profit for the day. Now, day 5. Here a candle has a nice strong close above the line. We take the trade and here you can see the wick did come very close to a stop loss, but it did not touch. So we are safe and we book a profit. Heading to day 6. Here it closes above the line. We take a trade and we book a loss. This is why I like using small targets with small stop loss. Even though our targets are small, we can keep trailing our profits. But when it hits our stop loss, we lose very little. Alright, day 7. Here we find another trade opportunity which hits our stop loss. So we book our loss and close the trade. We move to day 8. We find a nice strong close here. We take the trade and book a profit. Alright, we are almost to the end of our backtesting, day 9. Here we find a nice strong close above the line. We take the trade and it gives us a nice quick profit. Again, if you see here on the same day, we find another opportunity. we take the trade, and we book a profit. Now I think here we have yet another opportunity. Our third trade for the day, we take it and we book the third profit for the day as well. Okay, awesome. Now heading to day 10. Here we have a shorting opportunity. We take the trade and we close with a profit. Alright then, with that we end our backtesting. In our 10 days of backtesting, we have taken 14 trades, out of which 10 are profit and 4 are losses, which gives us an astonishing win rate of 72% with a risk to reward of 1:3. Which means with using this risk to reward ratio, in order to actually lose money, your win rate needs to be below 25%. Now what I mean to say is, forget the win rate. The reason an extremely simple strategy like this works wonderfully is cause it's so simple, there's no confusion, and that allows you to focus on more important aspects like risk to reward and your trading psychology. This strategy is best suited for those struggling with a strategy with too many complicated variables or price action where it's always hitting your stop loss. Forget about all those. Often at times, the simple strategies are what works the best. Hope you found this video useful. Many more trading and investing videos here at wealthztrader. Hit the subscribe button to stay tuned.